Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about Palantir Technologies Inc., which trades on the New York Stock Exchange under the ticker symbol PLTR. The platform I'm using today is TD Ameritrade, and I'm going to be providing my opinion as someone who is not a financial advisor. So take that with a grain of salt. The reason why I want to cover Palantir Technologies is because they are going to be announcing their earnings this week on August 12th. So the expectation is they are expecting right now it to be their first quarter positive earnings. So we're really going to be looking at that as the company has been trading on negative net income, and we'd like to see some positive numbers coming out at this point in time. Now, one of the reasons why we want to talk about Palantir in particular is because they have had a wild year. This is a company that IPO'd last year, and they make a lot of their money based off of government data analytics. They are a data company, primarily big data, cloud-based type of info, and right now the bulk of their income is coming straight from the government. Right now, about 2/3 of that. And so there's a lot of expectations going on with this company. You can see that at the beginning of this year, they actually traded north of $40 a share, going as high as $45 a share before going as low as $17.05. So right now, they've kind of built into this range. You can see on the chart right here where they had about 2 weeks above $25 a share, and they've really been trading in, going back for quite some time, trading in the $22 to $24 a share range. One of the reasons I really like this company as a long-term holder, as many of the followers on this channel already know, is that I like to sell covered calls on stocks, and this is a company that has traditionally had very high premiums on their stock. The reason for that is because this company has quite the capability to move. So if we look at the overall company size, they have a market cap sitting right now of about $41 billion. So that's super important because they have 1.9 billion shares outstanding, which means that it takes a lot of trading to really make that price move, which is why you're seeing on a 3% down day like this past week, we're seeing 24 million shares trade hands, which admittedly is not a lot in terms of the total float outstanding. Now, one of the things that I want to highlight when we're looking at this market cap of 41 billion, right now TD Ameritrade does not have a lot of the valuation metrics in the software platform because they haven't been publicly reporting for 12 months at this point in time. But we can look at their total fundamentals right now, and I'm going to do so from the income statement perspective. And you can see that from total revenue on an annualized basis, in 2020, the company brought in nearly $1.1 billion. So right now, just based on year-end 2020 numbers, you're looking at a total valuation of around 40x sales. So it'll be a little bit lower than that due to the 0.1 billion in total revenue. However, that is a very lofty valuation, especially when we look at the annual numbers. You can see that the actual net income was a loss of right at 1.16 billion. So all that revenue that came in, they lost that and then some, with a lot of that coming from not only just the expenses, but also we saw a significant amount, as you can see right here, of stock options and rewards that went into that number. Now, if we look at the quarterly numbers for so far this year, they have been blowing past what they did last year. Now, if we can see another greater than 300 or even a greater than 481 where we saw in Q2 last year, that'll bode well for the full year numbers. You can also see without that Q3 loss from last year, the capability to post a profit this year may be in the cards. So you can see that in Q1 of this year, they actually had the net income was negative $123 million. So the expectation here is now that they've crested that negative $853 million from last year, we're getting remarkably close to being able to push a profit. So that's very good. That's what we're looking for. Now, as far as the growth going or the potential going into earnings and what I'm looking for, I currently do not hold shares of this company, and this is potentially an entry point for me. So the simple moving average has been declining. Essentially what that is you are looking at the 200-day moving average or the 20-day moving average. Both have been declining. As you can see, it's kind of been flat for the better part of the past month and a half. So that's what I'm going to be looking at is this potential for a break up or a breakdown? Now, one of the things that I have concern about is a lot of the opinions on the stock, whether that's on Twitter, YouTube, Facebook, is all very bullish. So that's what I'm going to be looking for, despite the fact that we have seen a significant amount of sells from the people who own stock in the company. So you can see here, this is a lot of the significant sells inside their trading wise. You can see all of that information readily available here in terms of who is selling the company. So to showcase that, here's a more complete picture, and you can see that we've got significant amounts of selling. Primarily, you can see from the CEO. So you can see $48 million here, $45 million here from the same individual, $42 million, $42 million. So this guy is offloading stock at a very rapid pace. So you can see just from those sales right there, we're looking at nearly $200 million straight off the top, with a lot of the other executives are selling as well. A lot of that happening right before earnings. That's concerning to me. Now, I think that the way to play this gives you the capability of not necessarily going all in at this point in time, but you can dollar cost average in. The reason that I say that is, as we're looking at some of the capabilities here, there is a lot of opinions that are being issued on the company. Right now, you're seeing a lot of those opinions are basically right at break even. So the stock is currently trading right now at about $21 a share. And right now, we're giving the capability. They're showing minimal upside from the average hold expectation, quite a bit of upside on the very bull case, and some limited downside on the sell side. The reason why I think that there's a lot of capability for this company is because they are super high growth, and as such, their expected revenue is going to continue to climb. But right now, they boast a $40 billion market cap, despite the fact that the company is not profitable and only bringing in about $1 billion in total sales. As such, you have to think, at what point does this valuation become justified from a fundamental perspective? Over the past 18 months, stocks have largely not been trading based on fundamentals, but that's not to say that if we were to see taper news continue to become dominant in the fintech side of the world or in the Federal Reserve commentary, I do anticipate that fundamentals will come more into play. As such, you have to look at what the potential downside is for a company like this. So what I'm going to be looking for is as follows. So what I'm looking at here at the company level, as you can see with its valuation or the stock price currently sitting at $21.82, is I may look to leverage a debit spread on the put side for earnings play. The reason for that is right now, despite the fact that the company has a lot of potential in and of itself as the company, from a valuation perspective, you're looking at a 40 to, we'll say 36 to 40 price to sales ratio. They don't have a positive PE ratio, and I think the macroeconomic environment is turning a little bit more bearish. Now, if you were to purchase this company and sell covered calls, the potential is still there because the options premiums are still very high. But if we look at the growth associated with this company, if they continue to grow at 30% annually, their total revenue is in 4 years, they'll have right at $4.3 billion in total revenue, which will still be just right at a 10x price to sales ratio, assuming that they're profitable at that point in time. That's still a very lofty valuation, judging by 30% growth. So that being said, I think that depending on what they announce this Thursday or this week when they announce earnings, is you will see some of that bearish commentary in terms of the expected. Unless they have blowout earnings, a lot of this expectation is priced into earnings. And you can see that in the stock price over the past 10 days, where we've seen some rapid rises up and then coming straight back down. So if you play near the money, the 22 to 21 range, I think that there's a lot of capability to see some profitability on the debit spread side. So if you'd like to see that trade happen, I will be looking to make that Monday and Tuesday of this week. Feel free to join the Discord, which is in the description down below. If you think differently, feel free to go the opposite way and play a debit spread to the call side and let me know how that works out for you, because I think there's still upside potential as we go into earnings. All in all, I think that this is a great company. I think the valuation is a little high, and the more that we talk about the changing interest rate environment and the tapering of asset purchases by the US government, I do think that fundamental analysis will come more into play. So let me know in the comments below your thoughts, and if you find this type of content helpful and you've made it this far, please leave a like and subscribe. Thanks everyone for watching, and I'll talk to you later.